Hi, this is Michelle Silverman Bedell from Silverson's Realty, and this is Michael Les, the COO of Record and Return Title, correct?
That's right.
Okay, I want to make sure. Today we're going to speak about title insurance, what it means, the importance of it, the pluses and minuses, and any problems that arise. So I'll ask Michael to first tell me what is title insurance and the importance of it.
Sure, Michelle, thank you for having me today to talk about this very important topic. Title insurance is an insurance policy, as you might have presumed, that is issued in conjunction with a real estate transaction. So for Michelle and her clients who are here in Scarsdale, you're going to be dealing mostly with purchases of residential property.
Correct.
So, we can limit our discussion more to the residential side of things. A buyer of a property is going to purchase a title insurance policy at their closing, and that policy will cover them for any claims, interests of others against the property they're purchasing. So what does that mean practically? It means that you have peace of mind that when you take title, ownership of the property, that no one's going to come along and say that they have a claim against your property.
Right.
And if there is a claim, if someone does or something pops up after you close, the title policy will cover you for your loss or losses that you sustained by reason of that particular claim.
Okay, and I think that's important to think. It doesn't just cover you it covers you after you close on the property.
That's right.
Which is very important, right?
It's title insurance is an interesting insurance product. So the policy itself covers you for the life of your ownership.
Right.
You pay a one-time premium at a closing. You have a title policy that will cover you for as long as you own that property, and it extends to your heirs as well.
That's important.
Yes.
Okay.
What it covers is the typical owner's policy, which is what a buyer would buy at a closing, would cover you for any claims of anyone from the date of the transaction backwards. So title insurance is backward looking.
Okay.
And you think about a lot of insurance products, they cover forward risk. Right. So if you buy an auto insurance policy, that's covering you for the eventuality of an accident in the future.
Correct.
Right? A title policy actually works kind of in the reverse. Title policy covers you for anything that may have happened prior to your ownership.
Okay.
Now, these things might manifest in a claim after you purchase, of course. So let's take a simple example, and one that people like to use often is estate issues. So if you're buying the property from an estate, there's a process that has to happen for that estate to be properly probated, and for the representative of the estate to be able to transfer title to a new owner.
Right.
A classic claim is an heir. An unknown heir or someone that was not properly served with the notice of petition of probate comes along, weeks, years, months later and says, well, I have an interest in this property. I wasn't properly noticed that it was sold. I have a will that says that I get the property. And if that happens, and it does happen, I mean, it's not common, but it does happen.
Right.
You would then call on your title company to say, here's my policy. I need you guys to insure me.
Okay, so it's interesting. So that's one example. It could be an issue with land too, that somebody claims ownership to the land or out of possession or something. Part of what you do is you also do a survey, right? Part of that title search is in a survey.
So I think it's important to understand the process behind the title insurance policy. And so what I always describe is title insurance, sort of on the whole, is yes, it's a policy, but it's more than that. So it's more of a due diligence product that then is backstopped by a title policy at the end of the transaction. But the title report, or the title commitment, which is the precursor to the issuance of the policy, basically what we do is we research everything having to do with ownership, encumbrances, liens, mortgages, judgments, etc., for a particular property, right? And one of the things that we need to determine in that process is what is the property?
Right.
Physically on the earth, where is this property located? How is it described so that you know that when you close, you've got a certain plot of land with a house on it that you now own without a claim of another party. As you alluded to, one of the big things that we need to do is, and how we determine what that land actually looks like is described where it lies on the earth is with a survey. And so, getting a survey done is critical.
Right.
So if you back up a second and sort of understand the process, I think it's important for your clients and potential buyers to understand.
Sure.
Typically, the way it works is, a realtor will work with a potential buyer. They look at properties and they finally come to a place where you and your professional advice say, this seems like the proper fit for you. Let's make an offer. And then obviously where it goes from there. Ultimately, once you go and get into contract on a property, typically the buyer's attorney, the attorney who's representing the purchaser, is going to then order the title commitment, title report.
Correct.
Right, and that's when the ball starts rolling in the process that we do. Through that process is when we will determine whether or not there's an existing survey, or if there's no existing survey, if we need to order a new one. And even if there is an existing survey,
to have a new one.
We work with a lot of attorneys here in Westchester County, and most of them, I would say, recommend to their clients
a new survey,
or at least a recent survey where you feel pretty certain that there's been no substantive changes to the property.
Correct.
Because what can happen is you can have a survey that was done for the sellers, and maybe they bought the property in the 80s, and they've since put up fences and put in extensions on, and the fence that was in the survey is not the fence that's there anymore.
Right.
And so without the a certified current title survey, you don't know necessarily where those things lie relative to property boundaries.
Okay.
And so when you talk about possible claims in the title realm, right? So we talk about the heirs thing. That's an unusual circumstance. What's not unusual is property disputes.
Right. Exactly.
Very common that adjoining property owners will have either a misunderstanding or a dispute over where the property boundaries are for their property relative to the other, and that's where a survey comes in handy.
Right. So I think it's very important to really understand the process. Also, I think people ask me very often, especially today, and this comes up with financing, but what happens if a person buys in cash? They'll often say, do I need really title insurance? They don't really understand it.
Yeah, so my answer is of course going to be yes, because I've seen what can happen if you don't have a policy and there's a claim.
Right.
If you buy a property and say, you're buying all cash, and what's the median purchase price for a home here in Scarsdale? 1.8 million. So you're taking that risk on yourself. You're self-insuring at that point.
Right.
If there is a problem, and there is a claim, you have no one to stand behind you to defend it. And a lot of times what ends up happening is one of the things a title policy covers is defense costs.
Right.
So if there's a claim that should arise, if someone steps forward and serves you with an action that says that they have an interest in your property, for whatever reason, whether they had a judgment that was never properly satisfied, or the prior owner, there was a lien, there's a mortgage, there was some fraud perpetuated by a prior owner, one of the things a title insurance company is going to do is try to mitigate their potential liability.
Right.
They're going to bring an action themselves. They were going to hire an attorney on your behalf to defend your rights in court in that litigation.
So I think it's important whether you finance or not, or you pay cash. It's obviously important to have title insurance, which, by the way, we're speaking in New York State. It's regulated in New York State. So the fees are all the same, am I correct?
Yeah, so our premiums are set by, so our regulators, the New York State Department of Financial Services, we're required to file rates with them.
Okay.
The rating agency, rating bureau that we use is called TURSA. They do an actuarial and they determine what the appropriate premiums are based on the purchase price of a property. And those premiums are uniform across all the major underwriters in New York State. Okay. So whether you're getting a policy from First American, Old Republic, Stewart, Fidelity, those are the big four as they call them.
Right.
the premiums are going to be the same.
Right.
And then inside of that, there are additional, ancillary search fees that we search for on behalf of our customers and clients to determine that there's no open permits or violations, municipal searches. And there's some variance across different title providers for those fees, but they're basically all about the same. So, when you're shopping for title insurance, you're going to find that there's very little variance in cost.
Okay.
So what you're looking for then, right, is service, and you want to make sure that you're researching the underwriter that the title insurer or title agent is providing.
Okay. All right. And there's one last point. I know that a bank also has, there are two different title policies, right?
Yes.
One for the owner, the buyer, and one for the bank. Am I correct?
So typically, if you're buying a property and you're getting a mortgage to finance the acquisition, your lender is going to require that you purchase a title policy for their benefit, right? So what that policy is called a loan policy. That policy will cover the lender in the event that there's any claim made against the property that threatens their position, their lien position against the property. Because understand that when a mortgage lender makes a loan to you that's secured by real property, the intention, if it's a first mortgage as we know it, if they foreclose, they will be able to take the property back free and clear of any other interests. Right. So that's what that loan policy will ensure. That loan policy does not cover the purchaser.
No, I know.
And it's important.
It covers the bank.
Correct. It's important for people to understand that, because a lot of times people think, well, I'm buying a policy for the lender, so why, do I need title insurance for myself? Well, A, the policy does not cover you in the event of a claim. And B, New York smartly understands that they want people to have insurance coverage. They want people to have title coverage. So what they do is, if you are purchasing a property with a bank and you purchase a loan policy, they discount the loan policy significantly.
Oh, I didn't know.
So that to incentivize you to also get a policy for yourself.
Okay, that's good to know. I don't know.
And so, to understand that if you take an example of you buy a property for $1 million, you're getting an $800,000 mortgage, the premium on the $800,000 loan policy is reduced by 70%.
Oh, wow. Okay.
If you also get the simultaneous owner's policy.
Oh, okay. All right. So these are really good things to know, and I think title insurance is often people really don't understand it. They don't really understand how it fits into the process of buying a home and the importance of it. So
yes.
I really thank Michael. He always helps me out.
I'll take the opportunity, because that's a good point that Michelle makes. We operate within the ecosystem of the real estate transaction.
Right.
We don't want to be, or at least from my company, we don't want to be some opaque sort of shadow player. We want your customers and people to understand what we do.
Right.
Why it's important, and have transparency with what it does, what it covers, what it costs, all of those things. It's very important to us. And I'll tell you, one thing that we run into all the time, and you've seen this because we've done closings together, is people bring a check to the closing table, and listen, I bought home. I understand there's a lot of stress, there's a lot of money flying everywhere.
Right.
And one of the biggest checks that the buyers bring to the table is payable to the title company.
Right.
But what I think about people don't understand is that most of that money, the majority of that money, does not go to the title company.
Okay.
We collect money on behalf of different constituents. So if you're buying a property in Scarsdale for 1.8, you're paying $18,000 in mansion tax.
Right.
That's on the title bill. We collect that money, but that money is going to New York State.
Right.
Same with the mortgage tax. No, correct. So, I just, I throw that out there because I think there's a misunderstanding.
Oh, I'm sure this doesn't get explained to them probably until 2 days before closing when they get their costs.
That does happen.
Right.
But you and I work with some very good real estate attorneys.
Right.
And they do an excellent job of breaking down what the costs are. And it's important that the title company is able to explain that also in case there's any questions. So we invite that dialogue. We don't try to lurk in the shadows and not be something that the customers and clients can understand. What our process and what we do within the context of a transaction.
So I think, I mean, it's very interesting. And I will say, on a personal note, Michael has helped me out numerous times, even when I have a question about a property, right? I'll email you, check this out, I don't understand this, or whatever my question is relevant to that property. And so he's always available, I think, which is to me very important. And if we have a question, even if the transaction ever happens, but before or while they're making an offer on a property, things come up that I have a question about. So I thank you.
It's my pleasure. Thank you, Michelle.
Thank you. So on that note, I want to wish everybody happy holidays. We're going into the Hanukkah and Christmas holidays, and a healthy and happy New Year.